Has the stock market made a bottom? There was a little bit of strength last week, and some will wonder if the bottom is in. I will show you how to answer that question and provide my analysis of the stock, commodity, interest rate, currency markets, and then finally the day trade of the week on GOVX. So, has the stock market made a bottom? We had pretty good strength toward the end of this past week, and you felt like there was a scramble by the buyers to get back into the market. However, there is a distinct three-stage pattern that you need to understand in order to assess whether the market has made a bottom. I'm going to teach you that pattern, and then as we go through this video, I will show you all of the key market indexes and whether that pattern is showing itself. So what are the three key components? First, we have a break of the downward trend line. Then we have the build of a rising bottom. And then finally, a break through short-term resistance. Now, anyone with a chart, a pencil, and a ruler can see these patterns. But what's key to understand is that they occur on many different time frames. You could see this pattern on an intraday chart going back 5 days. You could also see this pattern on a weekly chart going back 3 years. And the chart that you focus on will depend upon the style of trader that you are. A day trader is going to look at a much shorter term chart of the overall market than a longer term investor. So let's take a look at the chart of one of the sectors that I think is starting to turn, at least in the short term. This is the XRT, which is an ETF that represents retailers. And you can see this is very quickly a 30-day 60-minute chart. So it's only going back the last month. When the tops are falling, the sellers are in control. We can draw a line across those tops to define a downward trend line. When the line is broken, that's step one. That's a break of the downward trend line. You then get your first pullback, and if that pullback is at a low that is higher than the previous low, you have the rising bottom, which is step two. And then finally, if you break through some short-term resistance, you have step three. So we've got that three-step cycle in place on the retail stocks, as evidenced by the ETF XRT. Now it's important to make the distinction though, this is a very short-term chart. If you're a swing trader, a day trader, this is the time frame of chart to look at. But if you're a longer term trader, then you want to look at that longer term 3-year weekly chart. And here, same thing, the XRT, but in this case, it's a 3-year weekly chart. So you can see going back all the way to 2019. And we've had a downward trend since late last year. So there's the downward trend line. We broke the downward trend at the end of July, early August. We then made the first pullback and are now breaking upward from the first pullback to define the rising bottom. So we've had step one, we've had step two, but now we still need to break through this line of resistance for step three. So it's too early to call a long-term bottom on the retail stocks. We can only do that in the short term. Now, as I go through the market analysis, let's keep these ideas in mind because we're going to see this pattern showing itself. So I'm going to jump over to the Stockscores website, and we're going to take a look at the S&P 500 first, SPY. And here you can see the weekly chart is still in its downward trend. If I draw a line across those tops, it's still in place. We do have the rising bottom potentially. So we've got the rising bottom there and obviously the lower low there. If we were to break this downward trend line, we would be breaking the downward trend line from a rising bottom. And that's a key thing to keep in mind. These three things don't have to happen in the order that I showed you. You could have a rising bottom build before the downward trend line is broken. As long as you have all three, as long as you have a break up from a rising bottom that's above the downward trend line and breaking through short-term resistance. So right now, that pattern looks something like this. If we were to come up into here and then break up from the rising bottom through resistance, we'd have a long-term reversal pattern on the S&P 500. We do not have that yet, so the long-term outlook is still negative. But we can jump to the 1-month 60-minute chart, and there you see the downward trend line right there, and we've just gotten through it. It's hard to say whether you've got a well-defined rising bottom there or not, and there's quite a bit of volatility. So my expectation is that there's a good chance we'll make another pullback before we try to go higher. So the S&P in the short term looks good, not great. In the long term, it's still got some work to do. Let's jump to the Canadian market. Symbol there is T.XIU. And by the way, you can go to Stockscores.com and enter these symbols all in, look at these charts. It's all free. I own the Stockscores website, and we make all of these basic tools for free. Here is the daily chart. Let's jump to the 3-year weekly chart to get that scenario. And you can see you had a downward trend line there, which we've broken. We've now built a rising bottom, and now we need to get up through that short-term resistance line. So making a step in the right direction. You can see the stock scores are 52. That's basically a neutral rating. When the trend is up, like it is here, notice that the stock scores in general are above 60. That's what the stock scores are all about. So you want to see that sentiment stock score, which is the green line on the chart. You want to see that above 60. That shows the momentum is in a positive direction. All right, let's take a look at the 1-month 60-minute chart. And we can see that we had kind of a parabolic move to the downside. We broke that. And then the linear trend line right here, we've broken that today, Friday, from a double bottom. So it's looking better, but it's still quite frothy. A lot of volatility. Volatility in price means uncertainty. So if you've got a lot of volatility, realize that investors are still unsure. There's not a lot of confidence in whether the market deserves to go up or down. That's why there's a lot of price volatility. All right, let's jump over to some of the exchange traded funds for commodities. Here's the fund for gold. Let's take a look at the 3-year chart first there. And you can see that we've got falling tops, so the sellers are in control. We've got strong support here, but we are testing that support. So gold needs to bounce off of this or it's going to be in trouble. If it breaks down through it on the weekly time frame, we could see it fall all the way down to this level, which is a fairly dramatic drop. So be cautious with gold in the long term. In the short term, it did try. It's starting to build some little rising bottoms here, and it is trying to break the downward trend line. So in the short term, if it can break this, then we may get a rally for a few days, maybe even a couple of weeks. But again, what chart you look at depends on the style of trader you are. You don't want to be looking at the 3-year weekly chart if you're a swing trader, because you're concerned about what happens in the next few days. By the same token, if you're a longer term trader, longer term investor, what happens in the next few days is not so important as what's going to happen in the next few months. All right, let's jump over to oil, which has been the hot market up until a few months ago. And in the last week, it had some weakness testing this support level. It managed to come back above support before the end of the week. And so that's a positive that it was able to defend that support line. We are still above the upward trend line, so it could easily come down a little bit and then bounce off of the upward trend line longer term. But if we build a falling top and then break down through this upward trend line of support, that's a real negative, and that would point to lower prices for oil. So long-term scenario is still relatively good in the looking back a couple of years. Looking back a few months, we're still fighting with some selling pressure. Let's take a look at the 1-month 60-minute chart, and you can see that we had some dramatic selling early in the week, and then Friday a little bit of a bounce back, but still all of this resistance to limit upside. I don't think oil's going up significantly in the near term, and so I would still remain relatively cautious with it. All right, well, what about currencies? Let's take a look at the US dollar, which has been on a real tear, and it finally showed a little bit of weakness on Friday. However, that weakness was not sufficient to break the upward trend line. And just as downward trends break from a rising bottom, upward trends tend to break down from a falling top. So if the US dollar builds a falling top in the weeks to come and then breaks down through this trend line of support, then we need to be thinking that it's going to go lower. For now, the trend is still up, and so remain optimistic about the direction of the US dollar. Now, one thing that I did find interesting this week is that Bitcoin finally showed a little bit of strength. It actually started early in the week with some of the Bitcoin miners showing some strength. So MARA, HUT, HIVE, these things were starting to move up before Bitcoin actually moved up, and then it moved up on Friday. But we shouldn't overstate it. The downward trend line is still in place. The sellers are still in control. We have a little glimmer of hope in the short term, but don't overstate it, as I said. All right, let's take a look finally at the chart for interest rates. This is a chart of the inverse of the US bond market, treasury bonds. If this goes up, interest rates are going up. You can see it has been going up for the last little while. It is coming into resistance. I expect that interest rates are going to stall here, which means the bond market is going to stop going down, and that should cause interest rates to pull back a little bit. That makes some sense. We saw that weakness in the US dollar. I think the US dollar pulls back a little bit. With a pullback in the US dollar, you get some stability in commodities like oil and gold, and that's also supportive for stocks. So then, let's take a look at my ratings. US stocks, I've upgraded to neutral on both time frames for US and Canadian stocks. Gold, bearish on both time frames still. Oil, neutral on both time frames. US dollar, bullish long term, but in the short term, neutral with that little bit of weakness that we saw. Bitcoin, long term bearish still, but I've upgraded the short term picture to neutral. And then interest rates remain bullish long term, but they are at a point where there's a good chance we will see a turn. All right, let's jump back into the presentation here and take a look at day trade of the week. And here we can see a stock that was on our short list of stocks to watch on Friday. And the reason it was on that list is it was trading abnormally, abnormal volume, abnormal price action. That's what defines what I call an alpha stock. This stock was in play. And those are the kind of stocks that I love to day trade because they have lots of volatility and tend to be more profitable. So we had a break of a pullback right here. And this is a case where you're breaking a pullback from a rising bottom. You have what we call a message candle, which is my own indicator that I use in a program called TradeStation. That indicator and many more are available to my active trader students. You can learn more about that in the trader training area of Stockscores. All right, so that's our entry point right there. Stop loss would be right here. Stock went on a pretty good little run, moving up about 5 RR, and then broke this steep upward trend line in here for a profit of about 4 times risk. We say RR for risk reward. So for every $100 of risk, you would buy 1,425 shares. That's going to cost you $18.80, call it $18.90 with commissions. You can't margin this stock because it's below $3, so you got to put up all the capital for it. But in this case, it earned 4 times risk, which is a $400 profit on $1,881 of capital outlay. That's a 21% return on a hold that lasted about a few hours. Well, hope that you've learned something this week. If so, click on the like button. If you have some comments or thoughts about where the market is going to go, I do always read those and love to read them, so leave those comments as well. But most importantly, subscribe to the channel and, as always, trade well.